Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 28th, 2024. It's 12:29 p.m. Eastern Time. I'm starting the video. Here's what I'm going to do in this one, sort of an eclectic mix. Won't be a long video, just couple trade ideas. Somebody asked me on Friday about the uranium stocks, my thoughts there. I'll go over those, including URA, the uranium ETF. My reply was, I think the lithium stocks look better. LIT is a lithium ETF, so I'm going to cover that. Just like I said, it's sort of a random mix of different things. I'm not going to repeat what I got out to you on the equity markets today. Those posts were very clear. You have those uptrend lines. The ones that I gave you that I'm watching on QQQ are generated off that key August 5th low. You have the same trend line here on Apple, and it actually goes all the way back to the April lows as well. And so, as I mentioned in that post this morning, this is peak earnings week. I call it that. I don't know if that's what the bobbleheads are referring to, but you couldn't have this is the heavyweights of all the big companies: Alphabet, Microsoft, Meta, Amazon, Apple, Intel, which isn't moving the market as much, but it's an active trade idea. So I threw that out there because if you're in it, you're rolling the dice anytime you head into earnings. You know my thoughts. If the chart's clearly bullish, that's usually the way it goes after earnings. And if it's clearly bearish, that's usually the way it goes. Usually is far from always. So keep that in mind. And if a chart's indeterminable, then it's a crapshoot, in my opinion. So, all right, let's just keep an eye. That's the trend line to watch right here. Lots of clean reactions on Apple. As I also stated in that post to you this morning, it's been my experience. The odds of whipsaws heading right before earnings, especially for a company that's about to report, you have to take any breakouts, be they bullish or bearish, with a grain of salt. If it happens, especially a couple days or the week before leading up to earnings. It doesn't mean the breakout can't stick or the breakdown. It just, again, means that, positive or negative reactions to an earning report can override that. And you tend to get kind of volume tapering off. You think about it, who wants to take a big position right in front of earnings? It's usually the opposite. Active traders like myself will recognize and then hold off if they don't already have a position. And if you have a position, then you just have to manage it accordingly. Like I say, be familiar with every stock has a different pattern of how it acts. These are no, that's not previous earnings. Either way, you can go back and you just study a chart and you can look for big gaps and you'll put up the earnings date lines and you'll see how that stock, the history that it's had around earnings. So there it is. It's just a super duper well-defined uptrend line. Big divergence. If this thing could pop 10% after they report later this week, and it's not going to negate or take away the negative divergence. Remember, negative divergence is not a sell signal. It would take this. It's actually not even a wedge. It's almost an ascending triangle pattern. So any post-earnings pop, and Apple has a history of that when it peaks, often does on earnings. Any post-earnings pop, we'll just take this right here and give you this big bearish wedge right there, whereas a breakdown is a breakdown. So whether we pop up first, we don't pop up, you have no sell signals on Apple. It's a clear, unmistakable, unarguable uptrend without any sell signals at this point in time. We did have that, from a longer term perspective, divergent high and cluster top, wedge breakdown there. And just like the stock market's back testing. So I don't want to spend too much time on Apple, but it is, again, the biggest of them all. $3.5 trillion company, crowd favorite. And so let's see what they do. Of course, the other ones too. Apple's on Thursday. You're going to have Alphabet, Microsoft, Meta first. And then I think it's Amazon and Apple take it home on Thursday along with Intel after the close, that is. All right, enough on that. The levels to watch. Let's talk about natural gas real quick. I got an update out to you today. Somebody commented, thinks UNG is going down to new lows and single digits. Maybe so. I don't know. I don't trade UNG. I trade the futures. I share UNG for those of you that don't trade futures. You're going to track better with futures. This is the long-term chart that I've shared for quite a while now and maintain that we're at the tail end of the low end of the range. We're coming off the low end of the range. This chart is a weekly chart. That means every candlestick here is 1 week of trading history, and this goes back to late 2004. So you're talking 20-year span right here in natural gas prices, and you can see that they're not going to give it away free. This is where we the low end of the range, and this is what I've been talking about. So we've been buying it here, and I've highlighted what I like to see for the major turns, the major inflection points, divergent highs. I'm just going to highlight them there, divergent low. I also have, you can see them all of them marked. All the divergent lows and divergent highs are marked. This was our most recent divergent low, and I've shared this chart many times with you in the past. I've measured the percentage gains off the divergent lows: 222%, about 160, 235, 207%, 563%, and so far only, quote unquote, with little air quotes, 110%, which is lower than anything we've seen here. And you just take a blended average, you're coming easily above 200%, again, going back 2 decades. So no guarantees on anything, but this appears to be the beginning of a new uptrend. Today it got knocked down pretty big, but we're only at the December contract. This is what they call the continuous contract. It's, one of my charting platforms is still showing the November as a current, but more volumes in the December, and this is what we're looking at here on the continuous, because that's what closed at on Friday at 309. We're down here to down a little less than 10%, about 280. I think it's 285 right now. I just pulled it up. So we're down there. There's an uptrend line here. It could easily come back to. So you could see more downside. And again, this isn't going, UNG is in ETN, and it has expenses and fees and has to roll the futures. And so that's why that could make a new low. But natural gas is not at risk at this point in time right now of making any new lows. You can see the floor has been 150 right there, but nice support here. A lot of bottoms come in around $2 right there, the $2 level, including that one, and then we had a pullback there. Now, when I analyze the chart, there is at times a seasonality component, but it's quirky. You would think that in the wintertime, as we're getting, we're transitioning fall into winter, natural gas prices come up. Sometimes you see that run up, and then sometimes the run up happens until about now, October, November. So I've studied that, and I have a different chart. I didn't pull it up for you now, seasonality. And it just depends on the year. Of course, there's other variables, supply, demand, how cold the winter is or not cold, and things like that determined. But when I look at it from where we're at, the peak here, we had a bottom right there with a divergent low that came in, looks like May, February, April. Okay, there's April, the A. So a little bit before, somewhere around March maybe. And that's right similar to this one here. So I'm seeing a lot of similarities to the pattern. You had the initial leg up, which mirrors almost perfectly this leg up. Then you had a pullback, and it got pretty aggressive. You can see they retraced about half the move up to right here. So again, move off the bottom, maybe even a little more than half. And that seems to be about what they did so far here. And then finally, and again, if it can take out the recent highs, boom, that should complete that next leg up. And again, history doesn't always repeat, but it often rhymes. And it's just the volatile nature of natural gas. I've said it 101 times. I call it the widowmaker. And so this is what happens. But like I said, we're still well off the lows, and we have the makings of an early uptrend. At least we have the higher lows. Any pullback to this trend line would offer an objective entry. And what would be very powerful to break, I have some resistance right here, the recent highs, especially that high, and that would probably give us another thrust up, probably that $5 area. That's what I'd be targeting right there. So I just wanted to say big, guys, big divergence. Again, divergence is not a buy signal if it's positive, and it's not a sell signal if it's negative. But very often, major inflection points, they are an indicator that the trend is waning, the momentum is waning, and a trend change is likely. And so we're already coming off that divergent low. We're still well above it. Anyways, I maintain my longer, intermediate to longer term bullish outlook for natural gas. And so that's that. There's your update, coupled with the one I already gave you today. All right, let's talk about kind of change gears and go to the euro And, that kind of dovetails into the GDX trade. This is GDX, been a very swing tradable. Even in this uptrend it's been in, you just look for these divergent highs. I've highlighted this chart, including recently. We have a recent short trade on it now. And just look for little trend line breaks. It's simple stuff, right? Wash, rinse, repeat. Little uptrend lines look like an EKG, an upward sloping EKG. There's your primary trend line. That was our most recent sell signal last week. This is a daily chart, and it doesn't, based on this, if I look at this, nothing guaranteed, but break that, go down to the trend line. Broke that uptrend line, we go down to the uptrend line here. Break that uptrend line, we come to the more significant uptrend line. And then ultimately, you're building bigger divergences. So you got to be careful with these miners. But right now, it's just really swing trading vehicle. Or if you're bullish, this is where it's objective to buy. I mean, you could buy here. It's a crapshoot to buy or to short right here. This was our sell signal. That was the breakdown, the most recent one. There was our previous trade, T1, T2, T3 hit, divergent low. And so there's the uptrend line. And if that breaks, it's going to bring in some deeper targets. Now, as I said, the one thing giving me a little pause was the euro US dollar. The gold had an unusual uptrend recently against this outsized drop in the euro. So I covered that last week. I made a correct call back here that the euro would peak and called it down on this bearish rising wedge there on the daily chart. I also added on the 60-minute chart for you right here. That's when I give you the update. And boy, that played out. But normally you'd see gold take it on the chin, and it didn't. So I talked about the mean reversion trade. On Friday, I started buying, and I will most likely be adding to that position euro futures E7. If you don't trade futures, FXE is the Euro ETF, ETN. You can see there's an uptrend line, a little breakout there, positive divergence. So I do expect the euro to rally. That means the dollar will fall. You can look at EUR, USD. It's the dollar-euro pair. That's what I was covering before. Coming off that divergent low, and when you look at the daily chart, you have this, it's dropped to support. You have this uptrend line right here. Comes off October 2023. And so you're there, you're at support. PPO is turning up, poised to, but hasn't yet make a bullish crossover. So that's something I note right there. I'm just going to circle them real quick, or we'll just draw the line. Low level, I want to talk about a low level bullish PPO crossover if it occurs. Last one was right here. The one before that was right here. And the one before that was right here. You decide, what did you want to do when those bullish PPO crossovers happened? So, and there's a low-level cross bullish PPO. You could see I had them marked. I'm just going back here. I was marking those. And it's a pretty dang reliable indicator alone, a standalone. But I use it in conjunction with everything else. So there's the case for the bounce in the euro, drop in the dollar. Oversold as well. If you get oversold, with a bullish PPO crossover, all the better. It just gives you additional confidence. There was oversold, but this is my extreme oversold, the yellow line. The blue line is the default 30 level, which is oversold on the RSI. And even that coincides with the bullish PPO crossovers, and you get a good buy signal. So a lot of reasons to like the euro long now, short the dollar. Again, maybe gold and silver, all that drop will price into it. You can only trade those on their own technicals. Again, if I could make a stronger case for an additional drop. And look, sometimes, the markets, you have these trading patterns that work, and finally it breaks, and then the bottom could fall out. I don't think that's going to happen, but anything is possible, and that's what stops are for. So either way, I like the euro. Let me show you E7. I'll give you targets for your futures traders. E7, it's not all marked up, but there it is. You have big positive divergence. It's been building, really comes back farther here. There's a price channel. We broke out and made a perfect back test, successful back test, moving higher. And so what you want to see is, now we go up. If we can take out this previous high, we start to have the early makings of an uptrend, which is defined as a security making a series of higher highs and higher lows. You can see my price targets right there, all potential targets. Minimum target zone there, about 109.70 if you're a E7 trader, Euro futures. Yes, a quick update on MJ and those, what was the other one, the cannabis ETFs I gave you. There's individual stocks too, cannabis, but I can't remember. CB, there's so many ETFs out there. trying to remember the one. It doesn't matter. Either way, you can see a lot of those. Like I said, MJ's flagging ETF, and if it breaks out of that flag, it should continue on up. Again, we'll see if we get additional lift in these stocks heading into the elections, with legalized cannabis on the ballot for several states this time around again. And, you can trade them each on their own till raise, about to pop, bullish falling wedge right there. ACB is about to pop. So same story. They're right about where they were last week when I covered them. OGI has broken out, but no volume. It's not taking a lot of volume yet. That's what you want to see too. You want to see the volume come in, then you'll know the momentum traders are there. All right, let's go into. I'll start with uranium because that's what I was asked about last week. And I don't have a strong opinion, but overall, I'm going to take this. Well, I'll show you the weekly chart in a second. URA is a uranium ETF. You can, I guess, last trade. It's been a while since I must have put out an official trade. I had a wedge right there. 2 targets. Looked like we came close to that second target there. But this is it. Right here recently, we had a divergent high. We broke down below the uptrend line. You can see here, and then we back tested. This is what I talk about, the problem with back testing. Sometimes it can go for a while, but as long as you're below the trend line, each one of those offered objective short entry. Then finally it was this second back test here that did the trick, took the uranium stocks or the ETF down 32%, put in a went full circle to put in a divergent low right there, and has had a pretty strong up. It's an up at this point in the game. I wouldn't chase it. Had I been watching them here, there was pretty decent support. I would have taken a shot or shared it as a trade idea. The two, my charting platform will show the components of an ETF for some reason, and you'd have to go to the website. I know there's more in there, but if I'm going from memory, in the uranium stocks, I think the majority of those are not listed on the U.S. exchanges. They're foreign shares, and that's possibly why I'm only showing 2 here. But I do have a list of uranium stocks I'm going to rifle through real quick, if nothing else, just for that subscriber who asked for my thoughts on them. But let me just, before I leave there, show you that bigger picture when I look at the weekly chart on URA. That's what we're looking at here. This was 2021. You can see you had big divergence, negative divergence, building. And again, you had a divergent high here, and you had a nice correction. And then this uptrend line started to form. At that point, you had 3 uptrend lines, 3 distinct reactions on it. You made another, blow off top type. You can see that everybody just bought that last thrust up, and that was it. It marked the top, and then they fell. The uranium stocks fell about 46%. Oh, got cut in half right there. Consolidated in a nice clean sideways range for a while, and then broke out, ran back, tested those highs, rejected. It did break out and then failed a week later, and that smacked it down pretty hard. And now we're trying again. URA is trying again, but it got smacked down again. So again, I'm referring to this previous all-time high. Traders watch those. Rejected there after about 4 weeks of testing it. 1 week, tried to break intra-week, failed, and you got a drop. This is what happens. I talk about it all the time. Fewer things in investing or trading are more bearish than a failed breakout. You dropped 30%, but you came back to support. So this is where you would have stepped in and bought. Then, and you also took out after that, you can see you broke and back tested the trend line. And now this is another high level back test of that same uptrend line right there. All right. And another, so far, I'm not going to call it a failed breakout because we're right on the line. I have the line, again, it's marked that previous high. It's about $32, give or take. So you want to watch that. But bottom line is, I don't think the RR is very good. And so in my reply on Friday, I said, it just made me, I think of uranium. I know it has nothing to do with lithium, but it makes me think of the lithium stocks, which I hadn't checked in a while, and I did. And there was a divergent high there. And there's another example where you broke down, you made one last thrust up. It's what I could see the stock market doing, if it has just a marginal new high, and simply extended the divergence. And then that was the end of the lithium stocks. They fell about 65%. Would have got wiped out. Ended with a big old divergent low, aka positive or bullish divergence right here. And we can draw that downtrend line. So they look much better from an RR perspective to me overall. Again, this is LIT, the lithium ETF. Oh, my apologies. I told you I'd go through some individual uraniums. We'll get right back to lithium. Here's my watch list here. And in no particular order, it's a watch list I created years ago, so it's not all inclusive. I may have to update it and go in and find some. Some of these may have gone to the wayside. I'm just going to mark the charts up because I glanced them, but I didn't mark them up. I haven't annotated this in a while. Support level here, support level right here. These are levels to watch. MHVYF. Mitsubishi Heavy Industries. Okay. UUU Energy Fuels Inc. Rejected at this. Tried to have a breakout above that downtrend line. Got rejected so far. It's coming off that big divergent low. Again, I just don't have a strong convictions on these. I wouldn't short them, but I wouldn't care to go long. I don't see a lot. That was a divergent high, and then followed by a breakdown there. That is Barrick. I don't know why Barrick's in there. Maybe they pull out some uranium out of the ground. Must be UEC, Uranium Energy Corp. Big nope, not even a divergent high. Was it? Yeah, I guess it was. If you really take it across, when you see it like long-term, big multi-month, even year-long plus divergence like that on the daily chart, then you want to take a look on the weekly, and it'll show through better. Usually on the weekly chart. So there's UEC. These guys look toppy to me. I'm sorry. Maybe I'm wrong. Again, I'm not going to short them right now. Maybe I'll decide to later. I'm just doing this to kind of give you an overview of the sector. And there's a trend line, and it just started to crack below that trend line. You've got a little bit of support right about here. That would seem to be the top right about here. And so if it breaks that, it's probably going lower. That's UEC, Uranium Energy Corp. SSUMY, Sumitomo Corp. I guess another Japanese one, I guess. I don't know. Trendline break back test, and it's rolling over below the 200-day moving averages. That's a bearish looking chart to me. There's a downtrend line that you can either continue to short rallies back into, or I wouldn't go long until it takes out that trend line and or those 200-day moving averages, which acted as support on the way up. But either way, that's a bearish looking stock. CCJ, Cameco Corp, just overbought, no divergence, but extremely overbought, and probably draw a trend line right there as well. And did have divergent high back here when it peaked. It had that divergence right there. I just wasn't tracking it at the time. Broke down there, then put in a divergent low there and rallied, so that's it. That one's gone. ITOCY. Just, I don't know. There's your uptrend line. I don't have much of an opinion on it. MQBKY, Macquarie Group. No opinion. And then there's URA. That's my uranium stocks. All right, back to the lithium stocks, and we'll wrap this video up. I'll cover some of the individual components. So so you can see as those already had a pretty healthy run up. They're trading near 52-week highs. Some people view that as bullish, and I do at times if the chart's constructive, and I don't see a reason that they're looking toppy. But to me right now, I'm looking at the lithium stocks that are closer to 52-week lows or multi-year lows, but with positive, aka bullish divergences. You can see here on the chart. So this is LIT, the lithium Global X Lithium ETF. Beautiful trend line. There was a breakout, rallied, went up, pulled back recently to this support here. That was these were the price targets I've had, 4150 ish. 4147 is the actual number, and so if it can run on up, this should be your next target zone, and then about just shy of $58 would be a near-term target, and maybe we even have a trend line that might come into play actually before that. All right, individual components there. On this list, I only have these two, ENS and SGML. I'm going to cover that, and then I have another watch list of lithium stocks, much more comprehensive. This one put in that divergent high, but it just found support here. You can buy it on pullbacks to this uptrend line with a stop somewhat below. When I say somewhat too, if you can use a daily close on that helps filter out these this stock is prone to these intraday pierces. There's 1, 2, 3 times that it's taken out the trend line on an intraday basis. That's why that skinny part is the tail of the candlestick, that shadow that goes on the bottom, you call it a tail. That's where it went down through the day, but then closed back above the body. The fat part shows you where you close. So a daily close is better because they're just killing. This is just the powers that be. These lower volume stocks are not actively traded. The powers that be can't move NVDA and Apple. You got to have a lot of money to move the market. But when you get in these smaller stocks, it's not unusual for the market makers and hedge funds and whoever to play games and pull them down and clear the stops. They turn around, they take your shares and they buy them. And then the uptrend continues. So that's a stop rate. And so either way, there's a trend line there. The other one I had in there, SGML. This one, nice, coming off a big divergent low right there. I'll have to study it a little further. You can see I haven't marked it up yet. I can see some resistance here. It's coming up on, and the 200-day moving averages. So it needs to take those out. See, got rejected off the 200 simple right there. This is when when it crossed below, tried to get back above, couldn't. And then it's been in a downtrend since. So ideally, if it can pop that and you have about $16 resistance just overhead, it should run up. Then that's a breakout and it will likely signal a trend change. And this stock could run quite a bit, but again, needs to take out the 200-day and to be safe, $16. But it is coming off a big divergent low, which indicates a trend change is likely. Just like this was a big divergent high right here. All right, you can see the negative divergence when it peaked. Simple stuff, right? And that's kind of the trend. And then even within the trend, you get divergent lows, and the stock will rally, and it's good for at least a swing trade. That was about a 62% counter trend bounce. It was a bear market rally, but 62%. This one right here, you also had positive divergence. I'm drawing it for you right there. Small divergence. And that was good for a counter trend rally of about 75%. This time around, we have a much larger divergence, and it's gone up 80%. And you can see it could go up more. All right, my other lithium stocks in no particular order, just how I have the watch list sorted right now. SQM, same kind of chart. Look at this, beautiful. Look how it took out the 200s right here. See, in a bull market, you buy pullbacks to the 200. Once the 200s get taken out, like they did there, they tried to regain them. Only could do for a few days and then lost it again, and it was clear. And then they kept shorting every rally back to these 200-day moving averages. That's the blue and red lines, simple and exponential moving averages, and then right there as well. So you have double resistance. I love these kind of setups when you have not just one but two resistance levels in which to trigger a buy signal. The downtrend line, which I think I have. If not, I'm going to tweak it up a little bit, set a price alert there. And the 200s. Now, if it takes out the trend line, it's going to take out the 200 days. So your first target is going to be about 5190. That's going to be about a 20% run. 6390. That's a 48% gain. And then $80, which is about an 85% gain if hit. That's SQM. ENS, I already covered, I believe. Yep, just covered. It's in this uptrend. I'll give you the trend line. You could buy pullbacks too. BYDDY, it's like P. Diddy or something. Messy chart, island top there. This is an ADR. That's why you see all these choppy candles with gaps everywhere, because an ADR is an American Depository Receipt. It's a foreign company, and then they wrap their shares, and they have versions that trade on the U.S. markets that you can buy. However, they're still going to trade the shares themselves. The main company shares trade on whatever exchange that is. I don't know this one. That could be, I don't know if it's Australia or where it is. But either way, that's what you get, those choppy candles. It's in an uptrend. A lot of volume on it recently. I don't know if that's a buying climax, but you can see a lot of volume, and that did have that island. Again, I'm giving that island top a little bit of a grain of salt. That's a candle separated by gaps on both sides. They're known as the topping sticks, but again, you're going to have gaps every single day because this is an ADR. And so when their foreign market, when the shares close on their market, it's different hours than ours. So every time it opens here in the U.S. markets, it's already moved overnight up or down. That's why you have gaps every day. LIT, I already covered that. I'm just clicking through my watch list. Again, it's cycle through their LITs in there. BYDDF, this is, I guess, a different variation of that one. ILHMF, penny stock, be careful. But again, these are what's in my lithium stock list. The common theme here is a lot of these have these downtrend lines and the 200-day moving averages just above. So if we can just a little bit of upside in this sector, and the majority of these stocks should start breaking them out, and they have the potential to run. That one's gone to the wayside. It was either bought, acquired, or went bankrupt. LIACF. You can see when it stopped trading. Another one done. SRAV.V means the Canadian Venture Exchange. That's kind of like our, Russell 2000 small caps. It's just the higher growth, higher risk companies that don't qualify to trade on the TSX, the Toronto Exchange. And so I don't have that chart marked up. It's low priced. Another one. These I'm just clicking through the ones that stopped trading. See, they either went bankrupt or were acquired or something else. So I see ILCV again for you Canadians. It's on the Venture Exchange. It's a penny stock. Be careful, 2 cents. You can see that a lot of these are. LITH.V, another Venture Exchange. This one's in this sideways trading range here. When you recognize a sideways trading range, simple stuff. Watch, rinse, repeat. There's the bottom of the range, about 45 cents. You buy at 45 with a stop somewhat below. Or there's also this sub level I have here. Sometimes recently it's come in at 50. They were buying it a little bit early. And the top is not as well defined. I'm going to tell you that right now. These are old levels I've had on this chart for a while. So broke out of that little minor downtrend line. Don't have much of an opinion on it. It's better if it could, but you might not get it. If the rest of the group breaks out, you're not going to have another pullback, or not very likely down to that 45 cent level again. LITH, US Lithium Corp, bye-bye, or something happened to it. LITV, see a lot of these again are on the Venture Exchange. So hopefully some Canadians are listening to this video now that can take advantage of these. Or, if you trade with Interactive Brokers, a broker like that, you can buy foreign stocks. Breakout, it just broke out. I give you its resistance right now at 20 cents. And that's it. I'm just going to rifle through them. If anybody's interested, let me know. If there's any that I missed, again, I created this watch list many years ago. That's a nice looking, it's a penny stock, but again, a lot of these lithium stocks are. So, take it. What I do with sectors like lithium stocks and the pot stocks, I take a shotgun approach. If you either use the ETF and then it's safe, you're diversified at least there. Or if you're going to take these individual names, especially these penny stocks, sprinkle a little bits. I call it Vegas money. Small amounts in a half dozen, a dozen, whatever you can manage. And, the gains are potentially explosive. If this thing goes all the way up to that first resistance level I have there, that's about a 577% return. So I'm going to give you another level. It's going to stop at first. Oh, right. I didn't mean to do it because we were there. I was looking at this. This was support right here, which was broken. So had I bought that breakout, I would have sold here and wait to either game to pull back or wait to a break above that 5 cent level right there. And that would be a move up to the next resistance or target. Okay, I might have recycled through LTM, CF. Either this is that same chart I just covered. Or another one. Oh yeah, maybe it is another one. There's Tesla. It's in my lithium, stock portfolio, and I still maintain I like that as a short trade. As I told you last week, I gave you a suggested stop if you guys wanted to follow it. You give it a little room and expect a rejection off this downtrend line, and then if and when this trend line breaks. And look, if my call on the market's right, it's either going to be right or wrong. I've had the same downside targets since late June of this year. Long-term targets on QQQ that calling for a drop of 45-50% in the market. I'll be wrong if we take out those market top ranges by quite a bit, and especially if we keep going, if it's anything then a brief punch above and then another divergent high and a drop. But where I'm going with it, we're not going to go to my deeper targets on QQQ, which again originally were based off the weekly chart, this board right here. T7 would be from where we're at now. If that final target, which I still maintain is hit, that's a drop of 48%. My point is we're not going to go there with what I'm trying to say is extremely unlikely that if we go down there that Tesla's not going to fall as well. So and if there's going to be a catalyst, now it could be anywhere. Catalyst can come 6 months from now. Maybe those targets I just showed you get hit, but we get stopped out first. So the market goes much higher, goes another 15%, 20% higher. And then there's a big drop, later on, and those targets are hit. If so, then Tesla will probably break out, most likely above this downtrend line. If not, and like I said, if there's going to be a catalyst, it could be anything, but I can think of nothing more likely and obvious than a batch of earnings disappointments. Notice what I said. I didn't say bad earnings. Apple, Microsoft, Alphabet, they're in the business of managing earnings. They're $3 trillion companies. I think they've got it down to a science, how to manage earnings, how to manage the books and the accounting and all that stuff. Rarely do they miss. They have, but it's not common. They usually beat expectations. It's the best quarter ever. It's just like the newest iPhone's always the best iPhones we've ever made and all that kind of stuff. So it's not about whether they have bad or good earnings. They're going to have good earnings. It's about how the market reacts and what they say in guidance. And I still maintain that this AI hype is not going to pay off. Google, Alphabet, especially all in. Apple, with the AI thing, it's funny because Apple, the fans are so diehard and loyal. Tim Cook keeps saying, "Oh, trust me, our AI is going to be great. It's going to be great." And there's no AI yet. You got to buy a new iPhone. But again, it's on board. Apple makes their own chips, and so NVDA really, Apple. And I'm not an expert in this, but I don't think the whole NVIDIA thing, which is the poster child of AI, is dependent on Apple because Apple's doing the onboarding AI when they finally introduce it in their newest generation of phones, because it's hardware based, whereas Google's cloud based, a lot of it. Some of it's on the phone. And so a lot of their AI is processed online, and so I'm sure NVIDIA has been a big beneficiary of it, and it is. Microsoft and Google, Alphabet, I believe, are the two biggest spenders on NVIDIA chips. So it'll be interesting. They're going to report this week, and I'm in the forum. I read, a lot. I go to a lot of the little granular, forums and blogs talking about the users of the Android phones, the Pixel phones, and the vast consensus. And I've seen people poll, "Hey, are you using this Gemini AI?" Everybody's turning off. I've got a Pixel phone. I love it. I've shut it off. If you know what I'm talking about, that's the free. They were trying to, they tried to sell it, then they couldn't sell it. They keep going through renaming their AI. It was Bard and then Gemini, and they're giving it away free now when you buy the phone, and even on their other phones, the older versions, I think the older Pixels, and they're going to give it away free for a year and then start trying to charge you $20 a month for it. Where I'm going with it, and I know I may be the exception, but I read up very few people, the majority of people not only don't use it, they don't want it on the phone, they turn it off. Again, there are some exceptions. Look, maybe it will reach a point, I understand it's in its infancy, where it's a must-have and you are going to pay $20-30 a month or whatever it is to use that AI, and whatever, if Apple starts to do the same thing, imagine they will at some point have a premium AI plan. That's where everyone's model's gone. Big tech is subscription-based services. Give the product away for free, low margins, but then make it up on revenue. With Apple, it's obviously they limit their phones to small storage size, so then you're forced to buy the iCloud storage, and or your photos are going to blow up your phone, and you can't take any more pictures or do anything until you upload them. So that's where it's all going, and all I'm trying to say is, whatever when I start hearing about a lot of people saying how useful they're finding this AI, and that they are going to pony up and actually start paying for it, then I'll see. So right now, all I can tell you is we know factually Microsoft and Alphabet in particular have poured in and Meta a tremendous amount of money, and I don't believe I know they're not seeing the return on investment yet. And again, we're going to get color on that when they report. So let's see if there's any mention that they may start to pare back on that all that spending on AI, and if so, good night NVDA, which I still have some aggressive targets that I have not waffled on or changed. They came out to you on June 26th when I gave you the market top targets, long-term targets on the market, and the video was right here. That was call off the side. We're effectively right back to where we peaked before, a lot like the stock market. And we already hit the first target. And remember, we covered in the video, we covered everything else. I was calling it down to the 200-day moving averages, which we hit. We have my first price. It was also horizontal price support. And so this divergent high right now is just an extension of the negative divergence we had here. There was your trend line break, minor trend line break. This is a much, much, much more technically significant and important trend line right here. And it's in relatively close proximity. Now, NVIDIA, they're kind of the outlier as far as big tech goes. Everyone else is going to be out of the way by Thursday after the bell, except NVIDIA. You got to wait until, but it doesn't matter, because if Microsoft and Alphabet and Meta and or any combination thereof just give a whiff that they're going to start to cut back on their capital expenditures for AI and the chips and all that. And I think, the charts tell me whether that's the catalyst or not. The charts say this is a beautiful long-term bearish setup. Now, you want the highest probability, the best odds that my next targets are going to be hit. T4 is still my current and final target. You got to break that trend line, and you have to break it on a weekly closing basis. It's a weekly chart, weekly uptrend line. But if so, the profit potential to my current final target is a 72% drop from where we're at right now. And I feel as confident today as I did back here when I gave you those targets, that those targets will be hit. It's patience pays. Nothing's changed in the technicals. The only thing that's changed in the technicals since back here is that the divergence we had in place has grown even larger on this, ever so slightly, virtually an equal high, slightly higher high. And so we just need, like everything else, you've got uptrend lines off the, trying to draw uptrend lines off the August 5th lows that need to be taken out. And so that's it. And there it is on the daily chart, that purple uptrend line. All my other lines got moved when the stock split, so I got to replicate that. But that's just a beautiful setup. And again, we're going to know a little bit more, we should maybe a lot more about the, where NVIDIA is likely headed once the other big tech stocks report this week. Okie dokie, I'm going to wrap it up here, and I'll continue to scan the charts, see what I can find for you. Any new trade ideas? I'm doing my best to have a good mix of long and shorts out there, and see if I can find you some new ones. This has been Randy Finney with Right Side of the Chart. Have a great day.